To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.
Hello guys, last question of the 22-23 paper. Short and sweet, we are going to start this. This is the final question of 2022-2023 O-level paper 2 second paper. You know that? You know that? You know that? I hope you know. We have done all the questions. This is the last question. This is the fifth video of 2022-23 paper. Okay. First question. Write two differences between the receipts and payments account, income and expenditure account prepared by not for. I have to say, guys, in this paper, in few places, even in the first paper, even in the paper 1 MCQ paper, the income statement of not-for-profit organizations was given to you on the paper as income and expenditure account. Okay, this name is also correct, but it's not really mentioned in the textbook. In the textbook, it's mentioned as income statement. Income statement. Okay, but on the paper, it's referred to as income and expenditure account. That is income statement. Same thing, huh? Two differences between. We always use a table when we want to show differences between two things. Always use a table. Yeah, we'll do it the same way. Okay, this side receipts and payments. Receipts and payments. On this side, income statement, as I have mentioned here. Okay, I'll use the same color so it's not any more confusing to you. Okay, income and expenditure account is known as income and expenditure account is known as income statement. That is the name which is used in the book, textbook. Income statement. Okay. All right. Two differences. Okay, here we go. Receipts and payments account is actually the cash book. Okay, so you can say it's similar to cash book. Similar to cash book. But income statement or income and expenditure account, this is the profit or loss. Similar to profit or loss statement. Next, receipts and payments account is prepared. Receipts and payment account is prepared by takes all the cash receivings and payments, takes all the cash receivings and payments, but income statement takes only the incomes and expenses relevant for that period. Relevant for that period. All right. Relevant for that period. Come on, man. Relevant for that period. That's called like it's called like the application of accrual concept. I put it in a simple manner. Takes all the cash receivings and payments and records. Okay. It's better if you can write records. Records. Records all the cash receivings and payments. Right. Two differences. You're done. But if you want more, you can write the final balance shows remaining cash at hand. The final balance shows final balance of this is the remaining cash, balance of cash. But the final answer of income statement is the operating results of the period. Final shows the final profit or loss. But you can't say profit or loss because these are non-profit now. So shows the final operating result. Operating result. There we go. We have 3 instead of 2. Next question. Total number of members except Children's Society is 250. How many members are there? 250. Monthly membership fee of a member 50. Annual membership fee of the year 2022 have been paid by the members except 20. 20 have not paid. 20 guys have not paid. Required amount of membership fee for the year 2022 recorded in the receipts and payments. Okay. Now we have to calculate the cash received or membership fees received amount. Okay. In the receipts and payments account, how much to record? That's what you should calculate. So what are we going to do? Just like we mentioned here, receipts and payments account is recording all the cash receivings and payments, not the actual, not the correct amount relevant for the year, received amount only. So first of all, monthly membership fee is 50. You calculate annual membership fee first. Annual fee is what? Monthly, if it is 50 into 12. 50 into 12, that is 600. 600, how many people paid? How many? 20 did not pay. Out of how many? Total number of members? Total members? 250. Out of 250, 20 did not pay. That is 230 only paid. That means out of 250 members, 20 did not pay, which means 230. only paid. So answer for this, membership fee in receipts and payment account is how much? 600 times 230. The answer is 000 this much, right? Is that correct? Now do your calculation, huh? Yeah, that is the amount or the value of membership fee for the year recorded in the receipts and payments account. That is A. Now B. Amount of membership fee recorded in the income and expenditure. This is the income statement, as I told you. Account for the year. It's easy. That is the relevant full amount of membership fee. Relevant for the year. I mean the correct amount that must be received from all the members for the year. Okay, that is easy. Total number of members 250. Whether or not they paid, it should be 250 times how much? The 600 membership fee recorded in the income and expenditure account for the year. For the year. So 250 into 600. Oh, we'll write it this way. 600 times 250. And the answer is 150,000. That is the answer to the B part. In the income statement, membership fee in the income statement. Going forward. Oh, here we go. Trial balance. The statements we so much love are here finally. The financial statements are here finally. Sonali's retail business. We have to prepare what? What is required? Statement of profit or loss. Statement of financial position. We call them in short names: statement of profit or loss, statement of financial position. Yep, that's what we have to do. All right, first let's draw the statements. I have told you, I have very clearly mentioned several times how to do these financial statements, right? First of all, you draw the statements, then you draw the statements with all the information items. Then what do? Then you first record or adjust the additional information given there. Those are the additional information, right? On top. That's the second part, second step. What is this? This is the Sonali's business. Sonali's business profit or loss statement for the year ended. For the year ended, and you put the date. Okay. This side we have Sonali's business statement of financial position asset, and you put the date. Asset 31st. Okay. Here we go. All right. Sonali's business profit or loss statement for the year ended. Mention the year, okay. 30 for the year ended 31st December 2022. Don't have space, right? Profit statement. For the year ended. Now it's clear. Okay. Put the items or mention the items. Sales on top. Then you get cost of sales. Sales, cost of sales. Sales, cost of sales. What is the relationship between sales and cost of sales? Sales minus cost of sales. That is the relation. Okay, sales minus cost of sales. Here we go, sales minus cost of sales. Under cost of sales, you must have these items. What items? Opening stock. I'm just writing short forms, guys. Plus purchases. You always keep a line or two for purchase related expenses because you might get purchase related expenses. Okay, always keep a line or two. Then plus purchases. With the purchase related expenses, keeping space for those. You write closing stock as the third item. Opening stock, closing stock. Right, then under that you get other incomes somewhere here. Keep space to write 2-3 items, like 2-3 lines. Other incomes. These are only the main items, okay? Other incomes, keep 2-3 lines. Minus expenses. That's it. Fine. That looks fine, isn't it? Next we have the SOFP. What items come on top? Which headers? Non-current assets. Keep 2-3 lines. Then current assets. Yeah. Then keep 2-3 lines. Every time you keep 2-3 lines under each header, in the SOFP. That's enough. Then we have the equity part, equity and liability part. Equity and liability part right here. Under that, again keep 2-3 lines. What comes next? Equity and liability means first equity, then liabilities. Liabilities, non-current liabilities, then current liabilities. Right on. Let's start with the question. Which part? You're going to start with the adjustments. Adjustments means additional information, and you know that. First one. Okay, here we go. Stock as at 31st December. 31st December is the end of the year. Stock at the end of the year is the closing stock. Closing stock 48,000 should put to both statements. Every adjustment should go to both the statements. So we know in the income statement, in the profit or loss statement, closing stock is already there, we have mentioned. So in front of that item, the closing stock, put to the second, mentioned in the second column, 48,000. That is the value, right? That is the value, 48. Now, in this, we have already recorded the closing stock. In this SOFP, closing stock or closing inventory come under current assets. Closing inventory, 48,000. Done with that adjustment. So, we can tick it. Already ticked. Second, machines should be depreciated by 10% annually on straight line method. Can you see that? Machines should be depreciated 10% annually on straight line method. Machines are non-current assets. Non-current assets depreciate during the year, and that's an expense. How much is the machine cost? Cost of machine? We have furniture and equipments, no stock, no machines right here. 200,000. Take 200,000, that is the cost, and do the calculation right there. 200,000 multiplied by 10%, that becomes 20,000. This is the depreciation, 20,000. Dip of machine, 20,000. Where do you put that? Just like before, income statement first. But where in the income statement? Where? In the income statement, I'm always saying income statement. It's the profit or loss statement, okay? Profit or loss statement first. Where in the profit or loss statement? I told you that's an expense. So, expenses are already marked in the profit and loss statement. It's already marked. Under expenses, which category? There are categories. Seriously? Yeah, there are categories. What are the categories? You should memorize these things, okay? I can't give you any other way. The only way is memorizing. What categories are there? What categories of expenses? 3. Actually, there are 4 expenses. Distribution expenses category. Then administration expenses category. We have done these things already. That's why I'm using the short forms. Okay. Admin expenses, distribution expenses. Then other expenses. If you do this, it won't be a problem. Financial expenses and other expenses together. Financial and other expenses together. Because of the space problem and I can do this. Admin expenses and financial and other expenses. Right? Depreciation 20,000, which we calculated, goes under admin because they are machinery depreciation. If it was a motor vehicle depreciation, it should be under distribution costs. Because it's a machinery depreciation, this expense item should be under admin expenses. Machinery depreciation. Done. Okay, so we recorded that too. Machinery depreciation 20,000. But only in one statement. What about the SOFP? What about this side? You should put to both sides, right? Machinery depreciation is actually a part of non-current assets. First of all, under non-current assets, you should mention first column should be cost column, the value columns. Next column is accumulated depreciation. Now we calculated depreciation, right? But why does it say accumulated depreciation? Accumulated depreciation. Then the last column is net book value or book value column. Carrying value also is correct. Why does it say accumulated depreciation column? Because it's the accumulated depreciation that you should mention here. Accumulated means added up the total depreciation. Not only that 20,000, but you have to check in the trial balance whether any provision or machinery depreciation already given. But I don't see any machinery depreciation. No. Which means you can put safely that 20,000 because that is the only 20,000. That is the only depreciation given in this question, 20,000. But don't forget to mention the cost in the cost column. Okay. And the name is machinery under non-current assets. We are done with that. Done. Electricity charges to be paid as at 31st December 2022 is accrued. Now this is a to be paid, accrued one. Charges to be paid, accrued. Accrued. Accrued means have to pay the expense, but that value has not been paid at the end of the year. Big problem. Okay, it is a unpaid expense, should be added to the paid amount. 2000 is electricity charges accrued. Check any electricity charges given. It's here. 12,000 plus this plus that. No. 2000 means that. Okay, accrued. Right, put it under expenses. Electricity charges is an, or anyway, light bill, electricity bills, expenses. No, that's what that's how we say. That's what we say. Light bill. Electricity charges is an expense. What type of an expense? Under which category? Admin. Electricity goes under admin. $14,000. After adding, I took the answer, right? Now, we put that onto this side, but what about to this side? Both statements, huh? This electricity charge which is accrued becomes, this 2000 becomes a liability because we haven't paid. Now we are owing. It's a problem. That's what I said, it's a problem. Owings are liabilities. So you put that 2000 under liabilities. What liabilities? Current liabilities. Electricity accrued 2000. Oh, we need more lines, right? There you go. Done. So we are okay with that adjustment too. Which means we are okay with all the adjustments. We are done with all the adjustments. This is also done. Finished. Now we move on to the trial balance. Okay. One thing that students do, they start with the trial balance and record these items first. No. You're going to mess up the answer. Now we go after the adjustments to the trial balance. Purchases 360, sales 538, put. Oh, first of all, ticket 360, 538, purchases 360. You know where to put purchases. Purchases is already mentioned. 360. See, purchase already mentioned. 360. Sales already mentioned. Sales is already mentioned. 538. Sales should go to the final last column, okay? 538. Right? That's it. Done. Next we have furniture and equipment. That's a non-current Asset, furniture and equipment, of course, non-current. You know where assets go. Assets go to this side. It's a non-current asset. So that's why I left some space here. Furniture and equipments. You know that there is a something called liquidity order. When we did the lesson on DP, the liquidity order of assets has been explained. 180 is the cost. No depreciation is given for furniture. Done. 180. Stock as at 1st January, opening stock 80,000. You know where to put opening stock. See? 80,000. You see that? Do you see that? Yeah, I see that. It's here. And we are done with this side. Yeah, stock. 8% bank loan. Ho. We already know that there is an adjustment here. This 8% is an adjustment. First you take the bank loan, 100,000, and from 100,000 you calculate 8%. Bank loan, you take the 100,000, calculate 8%. That becomes 8,000. This is the interest. 8,000. Now what you do? What you do is you check how much is interest given in the trial balance. Is it given? No, it's not given. Bank loan is given. This we have already taken. 100,000. Bank loan interest is not given. Yes. So building rent, bank charges given, but this is not what we are looking for. This is bank charges. Bank overdraft is given. This is not what we are looking for. Okay, it's not what we are looking for. Bank overdraft is a liability. And overdraft interest is given. This is overdraft interest. We know what is an overdraft and we know what is overdraft interest. Here we have loan interest. Bank loan interest. That's what we calculated. Bank loan interest. It's an expense and it is not paid. If it is paid, it would have been entered here. If it is not entered here, it's not paid, which means it's accrued. First of all, enter under expenses that 8,000 financial expenses. This is bank loan interest. 8,000. Got it? Then you enter it because it's an adjustment. Both sides you should put that. What is that? If it is not paid, expense not paid, just like this, it's accrued. Just like the electricity unpaid, accrued or unpaid. Bank loan interest. 8,000. Okay, I hope you understood that. I can't do the lesson, the entire thing right here, but I just gave it a very brief but clear explanation why we put the accrued loan interest. So that's what we should do if the bank loan interest is not paid. Interest. Okay, that's it. about bank loan interest. Now we are going again to check any more items. Of course, so many items. Electricity charges we took. Carriage inwards we should take. Carriage inwards we should take 18,000. Carriage inwards. I told you to keep some space for purchase related expenses. Now we get a purchase related expense. Yes, that is carriage inwards. It is carriage inwards. Carriage. 18,000, right? That's it. 18,000 taken. Distribution expenses. We know the category distribution. Put that 6,000 here. Distribution expenses. Under distribution expenses, you put distribution. Of course. Distribution. 6,000. That's how you do it. Building rent. Bank charges we didn't. Building rent 20,000. You put that first. Building rent, it's an expense, no? Rent is an expense. You put that. But under which category? Yeah, admin category. Building rent. How much? 20,000. Now the item that we marked. What is that item? This item. Bank charges. Bank charges, I put a cross because I marked it because with a cross I marked it because I wanted to show you that bank charges is not related to bank loan interest. We did bank loan interest and we recorded both sides. Now this is bank charges. Bank charges is just a expense. Okay, just take it 2,200 and put it under financial category. It's an expense and it's a bank related expense, just like bank loan interest, but not the same. Just like bank loan interest, it comes to financial expenses category. Bank charges 2,200. Done. Debtors always is an asset. Debtors is always an asset. Assets go to this side. Assets goes to this side. But non-current or current? Current. Debtors 70,000. Done. Creditors always is a liability. 50,000. Liability is always appear here and it's a current liability, so you put it here. Creditors under current liabilities. Okay, creditors 50,000. Done. Next, cash balance 45,000. Cash balance 45,000. And bank overdraft is there. Okay. Oh yeah, overdraft is a problem. Bank overdraft. It's an overdraft. That means this is not, as I told you earlier, this is not cash balance or cash remaining in the bank account. It has been, you know, the bank balance has been 0 and minus. It is an overdraft, which means it's a liability. Cash balance is an asset, but overdraft is a liability. So cash balance you put to current assets, overdraft you put to current liability. Okay, 45 and 12. Let's put cash balance. Cash balance 45 and under liabilities you put OD 12. Something that we don't usually get so many current liabilities in this question. Is that over? Is that over now? Is that trial balance? No, it's not over. We put the 12,000 under current liabilities. Still paid overdraft interest 500. Paid expense because it's interest and it is paid, it's OD interest 500 under financial expenses. Is it done? No. Advertising 6,300. That is a distribution expense. Advertising 6,300. Done. Machines we have already recorded, that's why we have marked. Capital 300,000. In equity section, capital is equity. Right here. Opening capital. You can write capital as at first 300,000. First 2022. Equity section. You mentioned capital. And we are done. Okay, 300,000 capital. Guys and girls, it's just a matter of doing your calculations now. Go to the statements. First, when you start calculations, first you calculate the gross profit, then you calculate the net profit in the income statement. How to calculate gross profit? Sales minus cost of sales. Take the cost of sales first. 80,000 plus 360, that becomes 440,000. 440 plus 18, 458,000. From that you minus closing stock. 450. Wait. 458,000, right? 360, 440, 458. Yes, 458 is the answer. That must be named as cost of goods to be sold. Things that you miss. I don't like to miss things, right? Now, you subtract the closing stock. Take the answer to the next column. 458 minus 48, it's 410,000. You minus sales, you subtract this 410,000. Let's put that 410,000 under this line, 410,000. You minus this from sales, 410,000. 538,000 minus 410,000, it's 128,000. That is the gross profit. Here we go, gross profit. Moving on. It's just net profit now. Let's take the, let's keep the gross profit there. Take incomes. No incomes. No. Take the expenses. Take the totals, right? Admin category total and financial category total. Let's take them. 12,300 here, 54,000 here, 10,000, 700 here. Total of these three becomes 77,000. That, my dear children, is your total expenses. Total expenses must be subtracted from this gross profit. 128 minus 77. How much is it? And we get 128 minus 77. How much is it? You do the calculation, please. 128 minus 77. It's 128. It's 51,000, right? That is your net profit, guys. Net profit transferred to capital. Done. Take it to the capital and add it to the capital. That's what we should do. All right. Where is capital? It's here. 51,000. Net profit. 51,000. And don't start the capital section to calculate capital section. Start from the top. Asset section. Okay. Let's do the calculations. Let's do the adding and subtracting. No, nothing to subtract. here it's 0, so 180 goes to this column, third column. 200 minus 20, it's again 200,000 minus 20, 180, 180, 180, it's 360,000 non-current assets. Then you come down to current assets. How much is it? 70 plus 48, 108, no 180, 118 plus 45, 118 plus 45, 163,000. Take the total assets, 360 plus 163, it's 523,000. Now it's just a matter of getting the liabilities, equity and liabilities, and see whether it tallies. Let's take the equity and liabilities. Equity section, we have 351,000 here, 351,000. Liabilities, oh, we forgot to put the bank loan here, right? Non-current. Bank loan 100,000, we forgot. Put the 100,000 for non-current liabilities. And we have there we go. 100,000 for non-current liabilities, and here 50,000, 60, 72. 72,000 under current liabilities, right? Here 8 plus 2, it's 10,000. 50 plus 10, 60. 60 plus 12, 72. How much? This is the moment. This is the moment. 351,000 plus 100, 451,000. 451 plus 72, 523. Done deal. Wait. Let me make it like very clear for you. Here it should be 72,000. Now we have space for the total to be transferred to this side. Now 523. Big numbers. We have finished the 2023 Business and Accounting past paper. This is the second paper, guys. And last question, seventh question, the financial statements. Be balanced in this manner. See the way it has balanced? Assets equals equity plus liabilities. Yeah. All right, guys. So this is it. This is the seventh question of the 2023 seventh question, right? So 2023 paper 2, the last question. We are done with it, and which means we are done with the whole paper, which makes me sad because this is the last paper that we are going to do. The latest paper. Next paper is your paper, 2023 O-level paper. I hope to see you soon after you do that, and wishing you good luck, guys. Do everything that you can to make your result, glowing. Take a good result. You do that by giving it focus. Give it focus. Work hard. Play harder. But when you work, you work. When you play, you play. Don't mix up the two. Work and play. Both should be balanced. With that advice, as always, I'm going to see you soon with another paper when you do your 2023, guys and girls. When you do your exam, I'll take that one too. Prabhat Ranasinghe signing off. Thank you very much for being with me. Thank you. Good luck. Bye-bye.
To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.